Welcome back, everybody, to Constructive Uncoupling, the podcast devoted to amicable divorces. I'm Judy Weigel, your host, an amicable divorce expert. Why? Because that's all I do, amicable divorces. Today we have in studio a gentleman named Phil Goldstein. Phil has a business called Link Business. Phil is a business broker. Phil seems to think that most people don't know what business brokers are, but I have a feeling many of you listening do. But this episode is going to be devoted to in a divorce situation. Do we sell our business? What do we do with our businesses? How do we evaluate the asset evaluation of it if we need to divide? So Phil's going to help us out with all of that. Phil, welcome.
Well, thank you so much for having me. It's a pleasure to be here.
Phil, why don't you tell people what a business broker is?
Well, very good. Most people are not aware of what a business broker does or that they exist. So it's really a pleasure to be here to be able to make that introduction. The short version is I help business owners find qualified buyers for their business. How we do that and the process, look forward to getting into more detail and talking about that. But that's essentially what we do.
All right. But when you talk to people about selling their business, there's a step you go through that we're going to focus on today, and that is evaluating the value of the business financially, right? Because we're going to show people in a divorce situation another path beyond hiring a forensic accountant.
Right.
Okay, cool. So you sell business as a business broker, but in order to sell a business, the business must be qualified with its sale value. And then in a divorce, most people go to forensic accountants to provide the asset value of the business, which costs at a starting point $10,000. That's just at a starting point. And I deal with wonderful forensic accountants who absolutely have to do this.
Yes.
But not everybody is able to pay that fee, and not everybody wants to go through that enormous experience. A lot of people that come to me just want to scale it down.
Right.
So how do we do this easily? And that's why you're here. Can you take us on that journey, Phil, of the piece of being a business broker that evaluates the value of the business?
Sure, be happy to. I'm not a licensed or certified appraiser, which is what you're talking about. Let's say when you're dealing with a court or you're dealing with an official evaluation of the business, you need a certified appraiser. That's something different. As a business broker, and I am a certified business broker, what I'll come in and do a broker's opinion of value. And we do that. We have a lot of tools and resources, methodologies, evaluation tool that's world renowned and that has many awards, that uses different algorithms, a very large database of established businesses that have been sold, that have actually been sold, that we can come in and using the financials for the company, tax returns, profit and loss statements, balance sheets, the things you'd get from your CPA or that you would be able to produce in the normal course of business. We'll take that basic financial information and along with a in-depth analysis of the business, of the management, the product line, the services, what that business does, and we'll reduce that to a broker's opinion of value that becomes a good measurement good basis for a determination about what is my business really worth. And there's a basis for it. It isn't arbitrary. It isn't winging it. There is a universe of businesses that are sold all over the United States in every industry, in every category. And so there is criteria. There is methodologies that buyers use to evaluate and purchase businesses. And so you're not operating. A lot of times business owners think, well, it's almost like a vacuum where if I go to sell my business, who would I sell it to? And they can think of a half a dozen competitors, people that they met over time that might be interested in their business, maybe an employee, a key employee that might be able to buy the business. This is kind of a typical thought process that's very far removed from what we actually do, because our buyer pool could be from coast to coast. It could be internationally, because we operate on 5 different continents, and we have over 500 brokers in our network. In the United States alone, 13 offices coast to coast. So the buyer pool that we're able to approach and bring into play is on a completely different level.
So even for a Southern California-owned business, which is where we are right now.
Yes.
Yes, even that. So, Phil, many, many years ago, I was asked, just as a one-off, so to speak, to sell a very small cosmetic company.
Yes.
I went to a family friend who was in the cosmetic business,
Right.
and I said, teach me about this. I don't know anything other than I wear cosmetics.
Right.
I don't know how to sell a business, how to put a price point together other than what were the sales last year. And this woman said, well, there are metrics that you use when
Right.
evaluating a business. It used to be, she said, in the cosmetic business, it's 7 times the sales that you experienced the previous year. But since there's so many competitors, it's now 3 times, because they're looking at growth. When you sell a business,
Right.
you look at the potential growth.
Right.
Does that sound like a familiar formula to you?
It does. I could tell. Let me just start. Maybe sort of you asked this question before. Go back just a little bit and say the starting point when you say, well, what are you going to do if you want to determine the value of your business? You want to look and say, well, what are our options as a couple? And I guess I'd like to start with saying that my experience is that your business, the business in a family, in a marriage, is typically the second largest investment, the second largest asset that people have. The first, of course, is your home over time. And so it's very important that as you move forward in your life and in your planning, that you want to preserve, you want to enhance, and you want to receive the best possible value from not only your house, however that's handled, but also from your business. It's a fact that, and we run into this all the time, is that more than 80%, a very large percentage of the people that own and operate a business, entrepreneurs, that own their own business, and I'm talking about businesses that range anywhere from a few $100,000 up to probably about 15 to 20 million in sales a year, that the vast majority of owners never give a thought to the value of their business. How to sell. Maybe they don't have a succession plan. That's quite common. But more importantly, they just never think about the day when I go to sell my business. What is it going to be worth? How can I enhance the value? How can I maintain the value if I'm in a difficult situation or going through a life struggle or process? How can I keep my focus, maintain the value of that business for the benefit of everyone, right? Including my children, which to me would be to the most important personally. That would be the most important part of that. So the giving some thought, understanding what's involved in making sure that the business that I've committed my life to and I'm running, whether it's individually or as a couple, you've got so much invested in that, emotionally and financially, that it's worth the time to have an exit strategy, to have a plan. Think about it. Even if you're not going to sell today, typically you might want to look today if you're thinking about exiting in a year or 2 or 3 from now. It's a process, a real process. And I'd say that in every meeting and every business that I list and market and sell, I start with it's a process. It is not a 30 or 60 or 90-day event. It's something that you plan for. It's something that typically from an initial conversation, meaning when I sit down with the owner or owners and we talk about, what are your plans? What are your goals? What would you like to achieve? Why are you deciding to sell? Because it's a big, big decision. To selling a business you've been in 30, 35, 40 years, if that's the case, is a major life decision, like right up there with getting married, having kids. It's a big decision, and it shouldn't be taken lightly, and it's not. And when you're considering that, you want to know what are the elements involved, how long does it take. I can tell you that typically an average time from a first meeting to a time an escrow closes in my business is about 7 months. So 7 to 9 months. That would be average. Not unusual for the process to take a year to 18 months. Very, very seldom do we see a business that gets listed and marketed and sold within 90 or 120 days. Of course, it's not impossible. It's just unlikely.
Right.
And I'm talking about asset sales, whether it's a stock sale or an asset sale. We don't need to get into that right now. But I think the takeaway is it starts with planning. It starts with what do you want? You being the couple, the individuals, like what is it that you want to achieve? What's that time frame that you want to accomplish it in? And hopefully, the longer the better. The longer that lead time from that initial discussion, the better, because then you can plan to do the things that will enhance the value and get you the best possible price and the best possible buyer.
Okay, but in a divorce situation,
Yes.
There's a family business, and they don't want to go to a forensic accountant. They just want to know, they just want somebody to talk to them about, well, what is the value of this business? When they come here and fill out what we call disclosure forms,
Yes.
on page 3 or 2, depending on what form you're filling out, it asks, do you own a business? And so you put yes, and then when did the business start? You put the year. Then they ask for the value of the business and the debt against the business.
Right.
And so when I know that the business isn't going to be sold, but they just want to see what the value is. I mean, I just start with something basic. I just say, well, what did you do in sales last year? Was last year typical? What are all of your expenses against the business? And then you have your net profit. I mean, that's a very rudimentary way of going about this.
Yes.
But what if somebody came to you and said, Phil, we're not sure whether we have to sell the business or not, but we do need to know what the value is so that we can make that decision in a divorce. How would you respond to that?
I respond favorably. That's what I do. I would say you've got the right person, you've got the right firm with Link Business. That's what we do, and it starts with evaluation. And the valuation you can use, I think, as a snapshot when you look at total revenue, you look at expenses. In general terms, that's okay. If you just want to get a sense for, if you told me what's the size of the business, you can't extrapolate a valuation of the business from that. I think in order to do that, you would need to get the financial statements, typically 3 years tax returns, if the business has been in business that long. If you want, I think what you're asking would be, what would be sort of the typical documentation package? And this, of course, would be provided directly with the sellers, or you get together and we put you have a checklist in writing. But 3 years tax returns, 3 years profit and loss statements, or if it's a current tax year that you haven't done the tax returns, it would be a profit and loss statement in the most recent year, a balance sheet, and then typically we'd like to see an equipment list, a copy of the lease. These are sort of the typical package documents that I would use to take in, analyze that, use our valuation tool and our approach to analyzing that information and data in order to come up with a business valuation. And as I said, our process, this is not new. This isn't something that just started. When they fill in that form, what you probably did is just a guess. Well, what I'd like to get, what I think my business is worth $1 million or $2 million or $3 million, whatever that is. I think it's worth that. What's the basis for that? I wouldn't be able to comment on unless I actually did a broker's opinion of value and determine in today's market what that business will likely sell for at arm's length to a real buyer.
The typical divorcing couple, because they're operating in enormous fear,
Yes.
will say the business isn't worth anything. It's breaking even. That's the normal response. It's breaking even.
Right.
I can't divide anything. I can't give up anything. I may just have to sell. But that is fairly normal unless you have a business that's huge. I mean,
Yes.
beyond huge. But then most business owners want to zero out anyway
Right.
and not pay taxes. So you have that kind of other element.
Well, let me distinguish that, because that's a key point here. When you have divorcing couples and they're looking for a way to exit that's going to be most beneficial to all parties. When you have that approach, that meeting of the minds, you got two different things that you clearly understand. I'm not a CPA, I'm not a certified financial accountant, and I'm not a lawyer, and so you're working with a business broker as a professional in a different capacity than that. Your CPA, absolutely, you want to rely on your professional to get the real numbers for tax reporting purposes and to make sure that the financials are correctly stated for all the parties. That's great. I work with CPAs, collaboratively, cooperatively all the time. It most deals will involve my interfacing and working with your CPA. Same thing with a lawyer. I think lawyers are, you need a professional advice on contract terms and agreements, especially in something like a divorce or separation. There's going to be some legal issues that have to be addressed by legal counsel on both sides, perhaps. I work with lawyers all the time in that capacity. But I will say unequivocally, lawyers are not business brokers. CPAs are not business brokers. We perform a different function as intermediaries in the transaction. And our goal, acting as dual agents, and this is something that's kind of, it's in disclosure. The law requires that we disclose our agency relationships when we sit down and talk from the beginning. But business brokers are dual agents. We represent both the sellers typically, and represent the sellers as well as the buyers in the transaction. And that has to be made clear and understood. And the reason is because you need total transparency and you need total disclosure. You need full disclosure. It will come out. If you're selling a business and you've got and you're selling to a qualified buyer, in the process of due diligence, after you make a contract and sign a contract and have an agreement, there will be a due diligence period, and all of the facts and information and financials will be disclosed and come out. And when you get into escrow, ideally you don't want to have any kind of fact or information come up that's going to derail the process or change the
just like when you're buying and selling a house.
Like buying and selling a house. And so for that reason, when you're talking to a business broker, you've got that fiduciary relationship. It's very confidential in every aspect, and so you want to be straightforward and clear on all of those facts up front in order to assure that you have a smooth process going through to the end. And I'm sorry, and then I think I lost my train of thought there just a little bit. So your question, the second part of your question.
Well, I don't remember, to be honest with you,
Yes.
But I do want to do this.
Yes.
So in the evaluation of a business and even before divorce comes up, let's just say you think a divorce is on the horizon, and or you want to make sure your business is operating at optimum stage. There are a couple things that I wanted to talk to you about that I don't think a lot of people understand.
Yes.
We're a town of small businesses in Los Angeles, but I think most cities are towns of small businesses if they're entrepreneurial.
Right.
You have businesses that provide goods and businesses that provide services. The service business, in my understanding, is the hardest business to sell for two reasons. Once the owner of the service business goes away, the service isn't provided in the same way as it was provided by the owner who's going away. And a lot of times people will put their names on a service business. Right. And I have learned, and you can correct me if you think I'm wrong, that it's much harder to sell a business that's in a person's name than a business that has a more general name to it. And then lastly, the gold, the absolute gold in selling a service business is the phone number.
Yeah. That
phone number is gold because people don't remember the name of your business. And I get this from Divorce Resource Incorporated, my business that launched this podcast, Constructive Uncoupling. It was in the name of the former owner. I put it in a general name thinking, well, if I want to sell it someday, I don't want my name on this business. Everybody thought I was crazy. Right. I said, this phone number has been in the marketplace for over 20 years.
Right.
And when people call here that either did business with the former owner years ago or are a referral from customers from years ago,
Right.
they have no clue what the name of the business is. Somehow they kept that phone number.
Right.
Can you address the really important aspects of a service business,
Yes.
and maybe how people should rethink, which creates value,
Right.
versus a goods business?
I can, and there's a number of questions there, so
I know. I'm sorry about that.
No, that's okay. That's okay. They're all great, and I want to go back where sort of like before we left off there. You had asked about the value. The company might be breaking even, and for tax purposes, they want to show the least amount of money for tax purposes, rather than to report, let's say, the full amount of income.
Right.
And that's a business strategy, very typical for small Main Street American businesses. For a lot of business owners, operate that business that way, where they'll, and I did when I had my own company, my own trading company for 25 years, where you put, expenses that are not necessarily business related against the
That's
business.
what I was going to say.
Right.
People put their
All the
family
time.
expenses in those business, and it kills them
Right.
when they either have to get divorced,
Right.
because both people sign tax returns.
Correct.
You can't turn back and say, "Oh, the business is worth a lot more."
Well,
can't
there's a
do that.
distinction here. So this is
Okay,
what I
go
get
ahead.
now, and we're getting back to a sort of, I recall where I was distinguishing what is
Okay,
a
let's
business
deal with
broker.
that because
Right.
of this other
And
question.
it'll lead in. It'll come
Okay.
into the other question.
Okay.
What does a business broker do that relates to the CPA or maybe your legal counsel, but it's different? How does that help you in your decision making and with your asset in a divorce? And a business broker, what I'm looking at and what I'm going to get and determine is what is the real cash flow? What's the real profitability of the business? And you say, what does that mean? It means that when you're looking at operating a business, if you put your travel expenses, you put your medical insurance personal, you're putting your automobile expense, you're putting your kids' college tuition, maybe your Costco credit cards are going against the business, or some other, maybe some mortgage expense or something related to your house that goes against your business. So you can reduce the income in the business, and then that goes over to the CPA and that reflected on the tax return. That's not of interest to me, okay, in terms of why you're doing that. That's not something that I'm focused on. What I'm looking at is when I get the financials is I do what's called a recast. And what we're going to do is we look at the financial statements and the operations of the business. What I'm going to do is I'm going to take those items that are not directly business related, that are personal charges against the business, and we're going to add them back. They call add backs. And that might even reflect the lease. If you're an owner of the business, you own the building, and it serves your interest to undervalue the rent and say, I'm going to only charge myself $10,000 a month rent for this building, commercial building or space. And it's the market value today at arm's length is really $15,000. Then what I'm going to do is I'm going to have to take $5,000 out of the cash flow because an arm's length buyer, a real buyer coming in that's going to buy that business and want to take a new long-term lease on the building, is going to have to pay current market rent rates, which would be $15,000. So if you're understating your rental charge by $5,000 and overstating your income in the example I'm giving, then I need to adjust for that. I make those adjustments. Mostly we're adding back, we're taking the automobile expense or these other charges, bringing them back into the income stream. So what we can get to is what's the real, what we call SDE, seller's discretionary earnings, which is a fancy way of saying profits. We're going to say, what's the real profitability of the business? Because typically on Main Street American, for most businesses today, it sells on a multiple of that. And you alluded to that earlier in our conversation. You talked about a 6 or 7 multiple. It's now 3. Each industry, each segment of the industry, whether it's a manufacturing, whether it's a service business, is that there is an established market. There is a determinable market of what buyers will pay for those businesses based on profitability of the business. And I know we're covering a lot here. We're going,
but I want to rein it in because we're not really talking about selling a business.
Yes.
We're talking about a divorcing couple
yes,
coming to you to determine,
Right.
what the value of their business is,
Right.
if they chose to sell it,
Right.
but maybe they're not going to choose to sell it. And so I kind of need to focus on that with you.
The starting and that using the same information is what would happen is we talk about the goals and plans. We do evaluation. What I would get, this is what your clients would expect, that they would get a page that says, this is the financial information, what we need to financial information to do a broker opinion of value. Could come from the CPA, can come from
Is that what it's called? That's really a cool phrase,
yes.
Broker opinion of value.
That's what
I love that, a broker opinion of value.
Right.
Okay,
and,
keep going.
And that comes from a CB, from a certified business broker, which is I am. It's or it would come if you're dealing with a business broker that is not a CBB, a certified business broker, then you would want it to come from the broker of record from that business who would have to sign off on it, as an example. But it has to come from somebody that's approved to provide that. But what we do is put that together, working with the sellers, and that's cooperatively because it's in both the husband and wives, or it's in the principal's best interest to provide the accurate information, the full information, so you can come up with a value. You want to know what's the real value of that business. And we would do that. And typically, if the business, when the business may be listed for sale or offered for sale, that charge or the fee for that is typically waived. It's normally a $1,500 fee, but we typically waive that or do not charge it. Or if it is charged,
it's a $1,500 fee to do what, Phil?
To do a broker's opinion of value.
Okay. All right. Very good. Very good. Keep going.
And that fee is typically, we'll waive that if the business is actually decided after we go through the process and we look at the numbers and we take everything into account. If there's a decision made to now list and sell the business and move forward, then that's just part of the process. There's no fee. If at some later date the business is listed, that can be paid at that time, or alternatively, it can be credited back the actual listing when it's taken. In other words, $1,500 paid, but on the sale of the business, then it's credited back in escrow.
Okay.
All right. So it's really nominal. I mean, that wouldn't be a barrier to anybody that wants to find out what's my business really worth. The worst you come away with is you come away with an understanding of what the business would be worth arm's length in the current market today. That's a valuable information and tool. Are you compelled to act on it? No. Do you have to sign any agreements or contracts? No. But this is a relationship business to me.
Yes.
It's not. In business, I believe there's two kinds of business, two types of people in business, which are those that are people oriented and related, and those that are contract focused and related. And I'm a people person, so you work with people, and everybody's circumstance is different. Motivations are always different and changing.
So as long as people are very honest with you, I certainly believe honesty is the best policy for everything that we do.
Yeah.
So they're either in the middle of a divorce or they know they're going to file for a divorce, and they say, look, Phil, we heard you on Constructive Uncoupling podcast, and we don't know whether we want to sell the business or not. We don't know whether this is the best move, but we do need to evaluate the value of the business so that we know what the best thing is for us. So that would be great. This is the best way to approach you. And then you can do the broker opinion of value.
Right.
That's your starting point.
Right. It starts with a planning session to talk, find out where are you? What do you want to accomplish? What would you like to do? That would then lead to a business valuation. By the way, there's one thing I wanted to get before I forget is that you had mentioned that you get to a business where the couple's sense is that, well, it's just breaking even. It's not making money. They may be thinking about their tax filing and the CPA, which we kind of touched on that. Or it may be the truth. Maybe that's where they're at in the business. It's just because we haven't had our focus on the business, we're not doing what we put the marketing effort in.
Things have changed. Business is different.
Things have changed, and we're kind of breaking even.
Right.
Okay? Then the focus of part of this discussion and dialogue may be, look, you might want to refocus on that business, and we can provide some guidance. I can certainly provide some guidance. And
to build the business back up.
Exactly.
Oh, okay, great.
Right. So what do you need to do? What are some of the things that you can do that are going to start, stabilize, enhance, build up the value with a business so that a year or 2 years down the road, you can realize a sale and a price that's going to be much more beneficial to everyone. And I mean, what are the things you can do? Would be make sure that you're not the sole owner operator of the business. You touched on this. Well, what happens if you're the only guy there and then you leave or you're not there? What happens to the value of the business? We all know that the minute you move away, sales go down, the business can suffer from that. So conversely, you may want to look at training, hiring in someone else, maybe investing some money in the business so that you can realize the benefit, especially business has been there for 25, 30 years. You know that in the past we used to do much more, twice, 3 times as much in sales. You might want to focus on regaining some of that that position, that revenue. Look at seller financing might be something that you want to consider. Are we willing? How would that be structured? If we seller financing, meaning let's say of the sales price, we're willing to carry back for a qualified buyer with good credit, we'd be willing to carry that back. But then how would that be worked out between the parties, right? To everyone's benefit. What about any cash that's taken out of the business? As an example where a lot of small businesses, there's a cash component to it. Now, does that run through the books? Is it reflected in the total revenue of the company, or does it go in your pocket? A lot of people put it in their pocket. As a professional business broker, I cannot recognize or count cash as an asset of the business. I can't, if it's not on the books and it isn't reported and there's no record of it, then it doesn't exist.
Right.
So one of the things you might do is maybe if you've been operating your business that way the last 10 years or however long, you may want to consider now depositing all of that cash into the business and building a record so that after 6 months or 12 months, you have a clear record of what the real revenue of the business is. Enhances the value. And a 3 multiple, as in a manufacturing business, let's say typically if it's a 3 multiple, $20,000 more a year in actual revenue in the company might bring you $60,000 more on the sales price of the business. So it's not insignificant.
Okay, I don't want to lose track with where we were, though, because we were they come to you, Phil, we don't know whether we want to sell the business or not. We're getting into a divorce situation, and we need a broker's opinion of value. So
right.
Would you finish where you left off with that?
Happy to do that. There's no obligation. There is no, when you engage my services or engage with me, if it's just for a broker's opinion of value and there's no interest or intention at all to go forward with the sale of the business, just to do that would be a $1,500 fee to do that typically. And we'll give you a full what we call a value. It's a value tool. You get a very comprehensive report and detailed information about how that financial analysis was made and how the valuation was determined. It's not a legal appraisal of the business, but it can be relied on, and it's a great tool to have. I hope that answers that question.
And it does, and I really appreciate that. Okay, so I got a call last week from a woman who said they're going to go through divorce and there's a family business.
Right.
She doesn't want to divide the business.
Right.
She wants the business to go on. Her husband loves the business, and so the business will stay where it is. But she said she wants to receive a 20%, she wants to receive 20% of the gross profit after expenses, well, that would be net profit after expenses, are deducted. How would the soon-to-be ex-husband provide financial information to the wife each year while the business is opened if he's open to giving her 20% of the net profit?
Well, you're not selling the business, though.
Not selling it.
Okay, then if you're not selling the business, then it wouldn't be a term or condition or part of the financial structure post-sale, after the sale, coming out of escrow. So sounds to me like this is something that they would want to work with their legal counsel with, and you could either, again, a business valuation. I think we can come in and take a look at the business and be an independent source of information as to what's the business worth, and also what's the cash flow of the business. We can certainly analyze the cash flow of the business, and then that would be an agreement between the parties as to how they want to structure terms and conditions. I think would just be worked out between the parties.
And then if I heard you correctly earlier,
yeah,
you could look at the business in your broker's opinion of value and
right.
say, look, if you did X, Y, and Z, you actually could increase your profit in this business.
Yes.
Is that possible? Is that something you do as a broker?
Well,
because you did kind of say there are things you can do to increase profitability. Did I not hear you say that?
We
earlier?
can. Well, that's
did
planning.
I misunderstand?
No, you got it. I think you got that right. I mean, we can work with the owners and say, look, right, my business is breaking even right now. What would you suggest we do, or do you have any suggestions on what we could do to enhance the value of the business to make it more attractive for selling? And I was saying that we certainly have a criteria and suggestions. Good books and records. Make sure all the cash runs through the business. Maybe train or have another layer of management in there so that it's not 100% dependent on one owner operator. All of these things add value to the business and the multiple, what a buyer would be willing to pay for it because it's a better value proposition. But we don't tell, or we can't come in and tell someone how to run their business and what specific, for example, product design or marketing program or what to invest in, other than to say, if you do these things, if you advertise and promote your business online and use social media, and you're not doing that right now, that's likely to add value to your business for a buyer coming in. But the issue of, what are you making now and how much, doing, let's say, a business forecast, pro forma forecast of future business operations is not something that business brokers engage in. That would be your CPA or your accountant.
Well, in conclusion, I was sitting next to a gentleman, and I forget what area of family law he was in. This was some years ago.
Yes.
And we were at a dinner, a family law event dinner. And I remember he said to me, I had to sell my business because I was getting divorced.
Yes.
And instead of allowing me to use the revenue upon which I could pay child and spousal support, my wife wanted to divide the value of the business. So he was left with less, at least in the short term, to operate on,
right,
which diminished his revenue for paying child and spousal support, and they decided it was easier just to sell the business. So I'm happy that you came on the show because these are serious considerations people have to have. And I initially wanted you here simply to give an alternative to the forensic accountant approach, which I know is very layered and very important. And I'm certainly not trying to minimize the value of forensic accountants. But I just wanted to give our listeners the opportunity to maybe approach looking at the value of their business a different way.
Sure.
And to give people an option that maybe selling the business like selling the house. You don't want to sell your house, right?
Right.
But sometimes it's the best thing to do because you walk away with more money.
It can be. And it comes up, divorcing couples is a reason, medical reasons, retirement, burnout. These are all reasons that come up commonly in selling businesses. And we're approaching right now the largest generational transference of wealth in history. It's over $1 trillion worth of generational wealth is going to transfer to the baby boom generation, to the next generation, and being able to approach this in a professional way and bringing resources into play so that that's done accurately and properly and timely is going to get increasingly important. As we go forward. There's two types of sales. There's an asset sale or there's stock sale. And most of what I deal with typically are asset sales. And what that means is you're selling all the assets of the business, and that includes trademarks, phone numbers. When you sell the assets of the business, doesn't include receivables or cash or liabilities necessarily. It can to some extent, but normally not. And when you're selling the business, all of the assets of the business are typically sold. And so for the parties selling, you want to make sure that those assets are preserved and maintained, or that they're enhanced in a way that when you actually sell the business, you get the best possible result, the most amount of money out of that business. How you then divide it or structure it or apportion it, of course, that can be worked out between the parties. But the key point is it's there. It's not by not looking at this and by not understanding the value of the business, what you can do to maintain it and grow it and enhance it while you're going through life's processes or whatever, your relationship issues, doesn't make sense for either party. Because at the end of the day, you want to make sure that valuable business asset is stable, growing, or ideally even gaining in value, so that when it does get sold, that it benefits the parties the most.
Well said, Phil. That's really great. I really am happy that you came on the show. We have to have you come back. We'll have to have you come back. So you have been listening to Constructive Uncoupling, the podcast devoted to amicable divorces. I'm Judy Weigel, your host. Oh, wait a minute. We forgot to ask Phil, how do you get in touch with him? So anybody listening, Phil, how do they get in touch with you? Thank you very much,
Judy. It's been really a pleasure. It's Phil Wolfstein, and the number is 310-663-2180. Again, that's 310-663-2180, and happy to be of service.
Excellent. And if you want to get in touch with me, which I would love for you to do, show ideas, questions, input, you can reach me at Judy, Judy, at constructiveuncoupling.com, Judy at constructiveuncoupling.com. Please subscribe. Please send any links to your friends so that we can continue to create a community for amicable divorces. Thank you so much for listening.